Hey everybody, welcome back to Layman Loans. In this video, we're going to see whether you will have a need to take a private finance in your life. So first of all, let's see what is a private finance, and then we'll see the pros and cons of getting a private finance. Fundamentally, what is a private finance? If an individual lender, it can be an individual or a company, not exactly a bank or an NBFC, but technically a private company or a private lender tries to lend you a loan against your property or in an unsecured way as a personal loan, then that is called as a private finance. What kind of metrics they ask in order to secure a private finance? Firstly, they'll see whether your monthly turnover is about, say, minimum 5 lakhs or ideally 10 lakhs or more, and they will give you an ultra short term loan of say 5 lakhs or 10 lakhs and ask you to repay the entire loan within about 3 to 4 months or maximum 1 year. So a private finance loan usually doesn't go more than 1 year at all. Usually it is a 3-month loan or a 4-month loan, maximum 6 months loan, at the max a 1 year loan. So it's going to be a very short term loan, and the tenure and the EMI amount will be pretty high, because as the tenure decreases, the EMI amount increases. In a private finance, they will even ask you to pay a bi-weekly EMI. That is, every 15 days, you will have to pay one EMI. So in a month, you will be actually asked to pay 2 EMIs also. And the entire loan will be over within like 4 months time. So in 8 installments paid in 4 months time, entire loan will be closed. But the rate of interest will be crazy high. It can vary anywhere between 40% to even 100 to 120%. It is even required to go for such a finance. Our strong recommendation is never. A private finance is not at all advisable, purely for the fact that it is a very, very high interest loan. If you see from a private financial point of view, they are actually taking a high risk on you. You will actually end up going to a private finance only if you are not qualified to get a loan through any banking institutions, that's a bank or an NBFC. Only then you will even look for a private finance. But the kind of risk involved for the private financier to lend you a loan itself is very high, because of which they charge a very high premium in the interest rate, and they will really charge an exorbitant amount of 30 to 40% or even 100% interest on the amount they are giving. So as you keep leaving this loan for a longer period, assume you're not able to pay back the entire loan within 4 months and it goes to 6 months or 1 year or 2 years, technically you will end up paying 3 times the amount what you have taken within the period of 1 or 2 years time. All right. So it is going to take off all the hard-earned money from you, and it is definitely not at all recommended. People will say during very pressed times, very desperate times, you can go for a private finance for a short-term rotation, but from our point of view, it is never recommended. There are so many proper secure channels of loans available through multiple banks and NBFCs, which are coming under the radar of RBI, and it is directly controlled by the RBI rules. So always go for loans which are RBI governed. Only then you will be able to make use of the benefits, and even the process of getting back the loan will be completely regulated from the RBI. If it is going to be a private finance, then possibly assume you fail to pay one EMI, they can literally come to your home and ask you to pay the amount. Or if not, they can just assume they have financed your vehicle or financed your home. They can literally take the asset within 1 or 2 months time. There is literally no specific tenure they need to wait. So if a bank needs to take back a property, then there is a huge process involved, which is a complete governing process. It's all RBI regulated. So for instance, there's a home loan and you did not pay one EMI. They will only send you a reminder message that you have failed to pay one EMI, and they'll start calling you by the end of the month that you have to make the EMI. So second month also you have not paid, then possibly they'll send you a mail and a request letter that you have to pay an EMI, and they'll send you people to remind you to make the payment. By third month, if you fail to pay, they will send you something called as a loan recall notice, wherein they'll ask you to pay the entire outstanding loan or pay back the EMIs which you have missed. Either of these two, you have to comply. If not, you will have to settle the entire loan. And the last stage, if you have missed all three EMIs, only then after 60 days, they will literally go for taking the property in a legal manner. And you can, of course, take legal immunity as well and try to extend this process. And through court proceedings, you can get more time to settle with the bank as well. All these happens only in a secured loan which you're getting from a banking company, whether it's a bank or an NBFC. If it's only a private finance, technically they give you loans against your checks. And check is a financial instrument which is used to promise a bearer that you're going to pay a certain amount which is written in the check. And if you do not honor a check, so assume you gave a check and it bounces, it is a criminal violation. And all these private finances will ask for multiple checks, can be anywhere between 8 to 12 checks. And if they keep bouncing your checks, literally you can be arrested. So it is definitely not recommended to ever go for private finance. We will never ever recommend any Layman subscribers or any person who is seeing this video to ever go for a private finance. I hope this information is invaluable and useful to you all. And if you're looking for any forms of secured loans from banks or NBFCs for your needs, you can always feel free to reach us in the Google form given in the description and the comments below. We'll be more than happy to help you. Looking forward to connect with you all in the next video. Thank you.